If you're running out of money too quickly after receiving your paychecks, maybe it's time to consider supplementing your paychecks by investing in the payroll processing stock Paychex. That's the issue we'll be addressing in today's Equity Empire Chart Analysis session. My name is John McHugh. I'm a former Wall Street analyst, hedge fund manager, and independent trader for the better part of 20 years. Today I'm going to be taking a look at Paychex, symbol PAYX. And when we look at Paychex, we're simply going to be considering two things. What is the direction of the trend? And are there clues as to where the big money stacked up trying to buy or trying to sell? So step one, let's assess the trend. We'll go from high to low, low to high, high to low, two highs and two lows. And we'll notice that as the highs move from left to right, they're moving higher. And as the lows move from left to right, they're also moving higher. And that's the definition of an uptrend. So Paychex is an uptrend. And when we're in an uptrend, we'll simply be looking for support levels for either bounce trades or lower entry prices for longer term positions. So we're going to change the time frame to 1 hour, and we can identify a support level right here in the 154.48 to 153.46 price range. There's another support level below that in the 150.40 to 147.73 price range. So two support levels for potential bounce trades or discounted prices for longer term entries. Let's go take a look to see if there's some resistance overhead where price might reverse. And this is pretty interesting here, folks, because we are currently in the last remaining resistance level. We're right up here near all-time highs, and we are in this resistance level right now. Today we worked our way almost all the way through that, but we're still in this resistance level. So that still could provide a little bit more resistance. Above there, it could be clear sailing ahead, but we still need to work our way all the way through here. Otherwise, we could have a pause in the upward trajectory. So our game plan would be this. We would, once again, simply be looking for a price pullback into one of these support levels for either a bounce trade or to get a lower price for a longer term position. We would set a buy limit order. If you wanted to get aggressive, you could go for the 154.48 price range and put a protective stop just below there. I'm going to be a little more conservative on this trade and place my buy limit order at 150.40, protective stop just below the 147.73 price range. And set the target. I'll just set the target here right up here at current price. So that has a reward to risk ratio of that trade of 2.82 to 1. In other words, for every $100 worth of risk you would take, you would have a reward potential of $282. Now, the game plan ideally would be for price to do this. For price to take a breather, pull back, and come back down and retest the 150.40 price range. Bounce off that level, ideally, before heading back to all-time highs. So that would be the ideal setup. If price continues higher and we don't get our pullback, we simply won't lose anything. If price pulls back to this level and bounces off the upper level, once again, we wouldn't get a fill, but we also wouldn't lose anything. So once again, if you want to be more aggressive, you could go for the upper level for a bounce off of that level, or like I have done here, a more aggressive entry, a more conservative entry at the 150.40 price range. So let's wrap up today's session. Hope you enjoyed the session. I'll be back each day this week with more chart analysis. In the meantime, wishing you the best of luck in your trading and investing, and we'll see you soon.